The oil market is plummeting right now. That after Russia and Saudi Arabia failed to come to an agreement to prop up prices over concerns that the coronavirus is hurting the global economy. Bloomberg reports that Russian President Vladimir Putin has pulled out of his coalition with OPEC because he's angry with the Trump administration for using energy as a political and economic weapon, including U.S. sanctions that hurt Russian oil projects. Russia's coalition with OPEC also helps America's shale oil industry, and Russia's move to pull out will hurt that industry. Prices for U.S. oil, West Texas crude falling nearly 25% today to $31.50. And joining us now is the national radio and TV host of Financial Issues, Dan Celia. Dan, thanks for joining us. Stocks fell so sharply in just the first 4 minutes today that the market automatically stopped trading for 15 minutes, and stocks have fallen almost 20% from their highs. What is your take on what Wall Street is thinking right now?
Well, Wall Street is doing what they do, and they watch sellers, and so people are selling. People are in a panic. Obviously, the oil market's tanking is playing a huge part in this. I think it's more right now the focus on oil than it is the coronavirus. Both of these things, in my opinion, are what we would call black swan events. They were totally out of the blue. They came out of nowhere. There was no analytics that was going to predict either one of these, one more of a geopolitical event, one obviously an unknown of this virus. So it is impacting markets. The problem with the oil crisis, Heather, is that will create a much greater impact on the economy. The coronavirus is certainly hurting the economy now, as we're seeing with tourism and such, and some of the travel industry, but isn't going to do, or not likely would do, the damage that an oil crisis might. So that is a huge issue, and that's something we've got to watch very closely, and that is what's pulling this down. If the oil stocks continue to drop as a result of a larger glut in oil globally, then that is going to hurt the financial sector at some point in time. And the financial sector is the largest piece of our economy, and we've got to be extremely concerned about that.
Right. It's all moving so fast right now. I want to ask you, just practically speaking, you had told us, I believe it was last week, that long-term investors will be fine. What is your advice to people who are watching their portfolios right now?
Yeah, I haven't changed that, Heather. I believe that both of these events are transitory. I think they're both temporary events. Yes, the virus could go until even September. If that would be unfortunate, but it could. I think the oil market has got to get straightened out fairly quick, because Vladimir Putin, this is hurting them far more than it's going to hurt us. They are already in a free fall in their economy. They've been in a bad way in their economy. All they have is oil. It's their #1 export. They need it desperately. They need desperately at least $60, $70 a barrel. And this is going to really hurt their economy. This has to be short-lived unless they just want to go into a depression.
All right, and we just have about 30 seconds left, but Bloomberg is reporting the Trump administration is working on measures to blunt the fallout. It could include a temporary expansion of paid sick leave, possible help for companies facing disruption from the outbreak. Would that make a difference?
Yeah, it would make a difference. It's going to hurt. Now it's beginning to hurt the economy in a bigger way. That will make a huge difference, because it's going to hurt productivity, imports, exports, travel. It's going to hurt across a much broader sector of the economy, not just the markets.
All right, well, we are out of time, but Dan Celia, thanks for your insights. We really appreciate it.
You're welcome. Thank